Thanks. We're back from the break, and we're here with John Spurr, who is the CEO of Inspired Life Mortgage. We're talking about the credit repair, and I think it's a great topic because we're trying to help people understanding how the credit understand how the credit system works as we see it, and trying to give them ways to help themselves.
Yeah, when you're, I'm jumping in here. I know Danielle has a question, but when you're working with a buyer, and you know that they're not that far from being able to qualify, they're just afraid of the answers that they're going to get. It's really tough in our industry. And so we're always encouraging people to call John and talk to him, because until you ask the question, you don't know what your position is. And that's the first step.
No, I agree. And I mean, I don't bite, and most loan officers don't bite.
But let's face it, people are uncomfortable talking about their finances with a complete stranger, or even, I mean, worse if it is somebody you know.
Well, and I come across that a lot, and I tell them, like, look, I'm like an attorney, I'm like a doctor. What you and I talk about stays with you and I. I'm not sharing it with anybody else. I don't have those conversations with anybody else, and I've done this for a very long time. I understand that talking about your financial situation or credit is uncomfortable. Maybe there's something you're embarrassed about. Maybe you feel like I'm going to judge you because, oh, you only make this much money, or you only have that much money in savings, or your credit score says. It's not about that for me. And in general, for most loan officers, that's not what it's about. We truly want to completely understand your current situation. And then how do we get you where you want to be? And can we get you where you want to be? A lot of times what you want and where you're at, there is no path or road or bridge. It just doesn't exist. So then we have to show you what we can do. But it's not, I mean, everybody you guys have ever sent to me or talked to, it's not an unpleasant, scary process. It's literally a lot of questions, understanding where you are, and then coming up with options.
It's empowering your clients so they can take control of their future.
Most of my loan applications is an education in mortgage, and periodically I throw out a question that I need to fill in on the application, and by the time we're at the end of the conversation, the application's done and you don't even know that you did it.
That's awesome.
You know, I have talked to some people who their credit is really low, or who have had, you know, things that have complicated their credit situation. Maybe they have not a lot of income, and so they haven't wanted a credit card. You know, there's a lot of reasons that someone would be trying to build credit. And, you know, there is this option of a secured credit card. Could you talk to us a little bit about what that is and why that might be a good thing for someone who's needing to start building credit?
Absolutely. And I just want to mention again, I am not a credit repair agency. I'm not a licensed credit repair person or credit counseling. I have over 30 years of experience doing this, and I understand how the process works.
How do we get a hold of you?
InspiredLifeMortgage.com, or call me on my cell phone at 520-247-3610.
Secure loans. Secure credit cards.
The credit card. Secure credit card. It is a great way to rebuild your credit. It's a great way to help your kids when they turn 18 establish credit. Most credit unions I know of do it. I know there's a lot of online companies that will do it. I think a lot of the banks do it also, but it's a simple concept. You had mentioned at the break, I think yours was $2,000, but I know the go as little as $300, because we just did this for my daughter's boyfriend who has no credit, wants to buy a car. Went in, opened up a bank account for him. We put $300 in it. They sent him a credit card with a $300 limit. And so there is money there in the bank. If he decides to not pay, they're just going to take it out of the $300 that we put in the account. From the standpoint of it reporting to credit, the credit bureau doesn't know that it's a secured credit card. The logarithms don't know that it's a secured credit card. It reads and acts and functions just like a regular credit card. And so it starts establishing that credit. Or a great way to repair credit if you've had issues in the past and you want to get a credit card again. Yes, it means you have to have some cash to set aside, but it's a great way to start reestablishing.
So we had kind of talked on the break too, if you were to add a child or a relative to your credit card, they can inherit that history, your credit history on that card.
Yeah, it's called an authorized user. I did this for all three of my daughters. I actually also gave them a card by buyer beware. If you do that, you better be ready to pay for your kid's bill when they go use it. I told all of them to keep it to $500 a month. I don't think any of them has successfully done that yet. But it's an authorized user, and if you add them to your credit card, that is then going to report on their credit report as payment history, and it's going to help or impact them negatively if you don't pay the bill or run that balance up to the maximum. But it's going to help. It's going to reflect on their credit and going to affect their credit score. So same principles apply. If you have a $10,000 limit and you run it up to 10 grand, that's going to have a negative impact on whoever is an authorized user on that card, on their credit. Now, if you have a $10,000 limit and you keep it around $2,500 and you make that payment on time every month, they're going to reap the benefits of what that card does for your credit, for their credit.
When the credit card that you authorized them to use, when you decide to not authorize them anymore, do they still have that credit history attached to them?
So when you remove them as an authorized user, that comes off, and that credit that is no longer there. It's no longer part of their credit history.
Okay.
But at that point, they've already established other things. Like my one daughter now has 2 mortgages, 2 auto loans, her own credit card, and she's super well established. My middle one has a mortgage, an auto loan, and the credit card. She's super well established. So right now, the only authorized user I have is my youngest, who's up in Phoenix in college, and we're just trying to, she just turned 19. We're just trying to get her credit established.
Okay.
You're a good dad.
I try.
No, seriously. I mean, I think a lot of parents, without having a history in finance, may not know to set their kids up. I accidentally or inadvertently set my kids up by opening a savings account that had a debit card. And so they had great credit when they were very young. That wasn't necessarily my goal. It just happened to be that's the way that account worked. And so they both started life with really good credit.
And I did this. I've done this my entire life, and so everything I did with my girls was intentional. I mean, my oldest is, 27 now, and she had her first house at 19. My middle, today's her birthday, and she had her first house at 18, and it's because I did these things on purpose to get them set up and ready to go.
Everybody's afraid to sit back after that great information. I'm afraid to talk because he sounds like such a great dad.
No, I kind of want to go maybe outside of your area of expertise a little bit. And if you can't answer the question, then that's okay. Matter of fact, Danielle's pointing at the timer. We'll get to that after we go on a commercial break.
You're listening to the I Am Real Estate Show with Ray, Sandra, and Danielle on KVOI 1030 AM, The Voice.